Hello and welcome to this session on one of the most unglamorous yet absolutely critical aspects of charity finance. We're not talking about fundraising events or frontline services, we're looking under the hood at the engine that keeps all of that running. We're talking about the chart of accounts. If your financial reports are confusing, or if your board meetings get stuck arguing about numbers rather than strategy, the problem often traces back to a messy or outdated chart of accounts. Now, this isn't a beginner's guide. I'm going to assume you've got a good grasp of the accounting fundamentals. With that said, let's dive in. This is part of our 10-minute Financial Essentials series. The goal is speed and clarity. We know these topics are dry, dare I say boring, so we try to focus on the most important elements. Think of your chart of accounts like these building blocks. It's the filing system for every penny that enters or leaves your organisation. Everything needs a home. But it's not just about having a list, it's about having a solid structure. These building blocks need to fit together efficiently so you can maximise your management information with the minimum of effort. If you organise the bricks badly or miss some out, your monthly reporting will be hard work. How will you know? If you're using Excel rather than your core financial system. It's a dead giveaway. The challenge is that not only do you need to satisfy the SORP for compliance, but more importantly, you need to make sure that your charity is operating effectively. You need to know the balance of each of the funds and the status of the projects versus their respective budgets. You want to be able to answer questions without spending days manipulating data. A good chart of accounts allows for this level of instant, confident reporting. First, let's clear up some confusion. One of our biggest self-inflicted wounds is terminology. Look at this slide. You might call it general ledger, or nominal code, an account code or a cost code. Functionally, these are all the same thing. They're all unique identifiers for your transactions. We're going to call it nominal code. But I want to go further in my definition. The chart of accounts includes the dimension or analysis codes, the different types of layer, actual, budget types and KPIs, and the information that's recorded from the account and the product. I'll explain more later. So what does good look like? There are 7 key attributes you should strive for. It must be multidimensional. It is not possible to fulfill the sophisticated requirements of a charity with a one-dimensional chart of accounts. It becomes too long and too cumbersome to manage. Don't do it. Logical numbering. Your code should follow a sequence that groups similar items together. It must be relevant. Don't have codes for fax machine expenses if you haven't owned a fax machine since 2015. And it must be unambiguous. If you have a code for travel and another for transport, your staff will never know which one to use. Be precise. Keep it short. A long chart shows that you are not using the dimensions properly. And finally, the big 2. It must comply with the SORP while simultaneously supporting management information. That's a tension that we have to manage. Now, in order to build an effective chart of accounts, you need to understand the ledger entry. The ledger entry is created whenever an accounting transaction is posted. This could be a donation, a purchase invoice, a journal entry, or a bank transfer. All of them create ledger entries, and the ledger entry is a clever little beastie. The nominal code is the primary classification, but it is only part of the story. The ledger entry has more work to do. There are the details of the transaction itself, the amounts, the source currency, as well as the same amounts in the base currency. Then it records the layer. The most important layer is actuals, where the financial records are stored, but on top of that you have layers for different budget types and KPIs. There will be details of the account, the counterparty to the transaction. As standard, Eden records the type of account, personal, local authority, trust fund, etc., as well as information as to where they're based and who manages that account. But it's possible to bring additional information from the account record as well, if you wish. Then you will use products to define different types of income and expense. By doing this, you won't need a nominal account for each, reducing the complexity in the nominal code structure. Eden records the standard cost and the product family, so you can group them together if you wish. Finally, you have 10 analysis codes, as Eden calls them. These are much more powerful than a simple tag or a label. On each one of them, you can record up to 500 pieces of additional data, and you can daisy chain them together. The chart of accounts numbering is driven by the SORP. You have to comply. There's no point fighting it. The management reporting will be done with the reporting classes and dashboards, so they will dance around the restrictions that the SORP creates. The numbering starts at 1000 with income. Now this is contrary to the tradition set by PwC and Sage 50 a very long time ago, when they started their chart of accounts with fixed assets numbered at 0. But it's contrary with good reason. Your chart of accounts should read like a book, and the most important page in the financial book is income. Each of the big numbers follows a natural break in the SORP classes, and every item mentioned in the 2026 SORP is referenced in the Eden chart of accounts. The balance sheet section follows, again with natural divisions. Finally, we've reserved the 9000s for KPIs. The trustees report requires 3 sets of KPIs: social impact, volunteer time, environmental, social and governance metrics. These can be recorded using nominal codes as well. Now, a nominal code isn't just a number, it's a data object with attributes. At a basic level, a nominal code has a number, a name, a description, and in a multi-company environment, it can be used generally or be company specific. Then there are different ways in which it is used. Finally, the nominal codes can be classified according to the SORP, by reporting classes, for HMRC, and to the previous chart of accounts to help with migration. This brings us to the most important rule for charity finance. Every transaction must be coded to a nominal code, then it must go into or out of a fund, and it should be associated with a project, of which there are 3 broad kinds: charitable, fundraising, and support and governance. This applies to donations, expenses, journals, everything. If you follow this rule, you will keep your chart of accounts much shorter and more effective because everything is properly allocated. Now, as well as satisfying the SORP, the reporting classes allow you to group information according to your internal management needs. Furthermore, the project can be linked to other analysis codes, so the project can be associated with a department, a PM, one of the charity's activities, as defined in the trustees report, and a location. So you don't need to key these in every time. They're recorded automatically from the project analysis code itself. Clever, eh? So to summarise, keep your list logical, keep it short, and use dimensions to handle the complexity of funds and projects. If you get this right, you can stop using Excel and start using your time to drive performance improvements in your charity. This webinar was researched and presented by me, Paul Foden, with assistance from Gemini AI and images by Nano Banana. Don't you love that name? Thank you for your time and good luck building your ultimate chart of accounts.